In this video, I'm going to show you the exact trading system that got me funded over $800,000, but don't take my word for it. Here's a sneak peek of some of the incredible results that the exclusive members have achieved trading this exact system. Make sure to stick around until the end of this video, where I'll guide you through a case study of 2 real trades that both myself and all of the exclusive members took trading this exact system. Let's jump straight in. Okay guys, so we're currently looking at the 15-minute time frame on gold, and the first thing on my trading plan is identifying a directional bias. So you can see right here the 50 EMA is less than the 100, which is less than the 200. So this indicates that we are sell bias on this market. That means that we are only looking for shorts. If you're looking for long positions, then you are counter trend. And this is where so many traders go wrong. They may understand that we are sell bias on this market, and they may be looking at getting short during the London session. They're going to have a stop loss above the London session highs, and what happens? This position ends up getting stopped out. Why did it get stopped out? Because you're not incorporating liquidity concepts. So let me break it down as simple as possible. So we understand that we are sell bias on this market. So I'm just going to remove the 50, 100, and 200 EMA, but please keep in the back of your mind that we are sell bias right here. Because we are sell bias, we need to see a raid of sell side liquidity. And so this is your raid of sell side liquidity right here. And all that simply means is, let's say that this is the London session range right here. And let's say we're heading into the New York session. We have buy side liquidity resting above the London session high, and we have sell side liquidity resting below the London session low. Because we are sell bias, we need to see a raid of buy side liquidity, because what this will be doing right here is enticing traders, thinking that this is a breakout and inducing them long within the market. This move right here will also stop out any early sellers that were looking at shorting this market during the London session. Because as you guys know, retail traders' stop losses are way too tight, and therefore we can anticipate that their stop losses are above this London session high. So once we've seen the run of buy side liquidity right here, we can look for our entry model to get short within the market to go with our directional bias, which, as discussed before, is sell bias on gold right here. So notice how these entry models look exactly the same, and this is what you need to see before entering a position within the market. All right, so we see a raid of liquidity during the pre-New York session. So now we're waiting for a 15-minute bearish confirmation during a New York kill zone. So we're waiting for the New York session to begin. The New York session is between 8 a.m. and 10:30 a.m. New York time. The London session is between 3 a.m. and 5 a.m. And the Asia session is between 7 p.m. until 12 o'clock midnight. So if I just zoom in right here, we get a 15-minute bearish candle during the New York open. We can enter a sell position on the break of this bearish candle high. Invalidation always goes just above the liquidity sweep. That is this high right here. Give it a little bit of room to breathe. And I like to target a mechanical 1 to 2 risk to reward. And this gives you a repeatable framework. We're triggered short in this trade right here as price breaks the bearish candle low. And now it's very important not to micromanage. It's either stop loss is hit or take profit is hit. There's no in between. And you can see during the New York session, this trade hit take profit for a 1 to 2 risk to reward. Just to put things into perspective, the duration of this trade was 3 hours. And so no, this is not a swing trade. No, this is not a scalp. This is more of a hybrid style trade. And you can see there was actually some further continuation to the downside, and price moved at least a 1 to 3 risk to reward. However, based on my rules and my mechanical system, I always take profit at a 1 to 2 risk to reward, because this is the optimal risk to reward for this trading strategy. You can see a couple times price came back to break even, and this is why it's very important not to micromanage your trade too early. It's important to allow it to play out. It's important to be extremely patient within the market. Just in case anyone's thinking that I'm cherry picking these trades, here's the analysis that was sent ahead of time to the exclusive community. Here's the exact entry that was sent to all exclusive members, and here is actual execution proof of this trade right here. Okay, so that was case study number 1. Now let's have a look at case study number 2. And this right here is a long example. Of course, step number one, we need to identify directional bias. The 50 EMA is greater than the 100, which is greater than the 200. So this indicates that we are long bias on this market, and therefore we're only looking for long trades on this market. If you're looking for short trades, you are simply counter trend. And again, this is where so many traders go wrong. So during the London session, traders may have understood that the directional bias is long on this market. And so once they see this bullish confirmation over here, you're going to enter a long position with a stop loss below the London low or even below this swing low over here. And what ends up happening, you end up getting stopped out. The reason why is very, very simple. And that's because you're not incorporating liquidity into your strategy. So we're during the New York kill zone. Again, this is between 8 a.m. and 10:30 a.m. And we see a raid of London session sell side liquidity. And this right here is below the London session low. We do get a 15-minute bullish candle, and therefore the buy order was placed above this candle high right here. Invalidation was below the liquidity sweep, and I was simply looking at targeting in a mechanical 1 to 2. So in terms of triggering us long, price needs to break this bullish candle high. However, if it breaks the low, this will invalidate our trade, and we will need to wait for another confirmation. You can see right here, this bearish candle breaks the candle low. Therefore, my buy stop was removed out of the market, and we need to remain patient. We then raid the Asia session sell side liquidity below the Asia session low. That's this manipulation right here. And so we're still during a New York kill zone, and we're just waiting for another 15-minute bullish confirmation, and we get that right here. So we can enter on the break of this candle high, invalidation below the liquidity sweep, and again simply targeting a mechanical 1 to 2. We're not looking for a home run here, we're just looking for a repeatable risk to reward. And during the New York session, this trade hit take profit for a 1 to 2. Once we were triggered right here, it was literally either stop losses hit or take profit is hit, and there was no micromanaging in this position. The duration of this trade was literally 45 minutes, and this was over the duration of the New York session. I want to be honest, not all trades will go straight to take profit like this one. However, this right here is a very good indication that 1, your directional bias is correct, and 2, you have a very strong confirmation. And then you can see price reverses strongly to the downside. And this is why it's very important to take profit at these logical risks rewards. We're not looking for home runs. We're not looking for 1 to 10s. We're just looking for repeatable 1 to 2 risk to rewards. And so this was another incredible trade that was taken on the 15th of April. So this is using 1, a directional bias using the EMAs. 2, we're using session-based liquidity. 3, we're looking for strong confirmations once we've swept liquidity. It's these 3 confluences that give you a very high probability setup. And you know, guys, at the end of the day, trading doesn't have to be difficult. And I actually encourage you that your trading should be very, very simple. The more complicated that you make your trading system, the more variables that you add, the more that you end up relying on discretion. And so when I made the switch from trading a discretionary system to a mechanical rules-based trading system, my trading absolutely transformed. And so this exact system has allowed me to get funded over $800,000. It's worked for me, it's worked for many of my members, and so I think it can work for you too.